My name is Darren, and we are members of something called the International Business Structuring Association, or IBSA. Essentially, it's a network of professionals that serve clients, private clients, so families that are exposed to multiple jurisdictions and they're running businesses, entrepreneurs. So it's not just restricted to tax, even though we're going to talk about tax. It'll be like investment migration, IP lawyers, insolvency, just anything to do with what the family will go through as they cross borders. And with that, I'd like to introduce you to the panel. Jose, you're going to start from your side and introduce yourself.
Thanks everyone to join this, and thanks Darren and Stepper 80 also for our participation. I'm a tax partner in Squire Patton Boggs, based in the Madrid office. I do international tax, even though I could sound partly American. It's my mom's American, my dad's Spanish, and I'm actually probably the only one not talking about U.S. taxes here, but some of the additions around that, which is always great to hear. Everyone living outside of the UAE, like myself, is excited to come to a place where Texas is a friendly environment for Texas. So you got to stay away of our tax network around how the trends, the difficulties around kind of keeping the taxes low, and especially with the U.S. citizens. So happy to be here and try to contribute to this discussion.
My name is Jimmy Sexton. I'm the founder and CEO of Esquire Group. We provide international tax and wealth planning services to affluent multinational families and help them minimize their taxes and pass their wealth to the next generation in a tax efficient, organized manner.
My name is Vince Trong. I'm based here in Gate West with a company called GSD Capital. I'm from California. I'm an American CFP, so I do financial planning, financial modeling, asset management for clients, and I've been here 16 years now.
Doesn't Spain, because I think I read somewhere that Spain has a super low threshold for tax owed to where it becomes like a criminal case?
Yes, I mean, that's the thing, it's 120,000 tax savings a year, and in tax inspections, they use it a lot. They don't apply it, but sometimes most of the tax inspections, and it happens also wrong, you want to finish with an agreement, right, when you've done something wrong. But I guess, I mean, the trend is, we're seeing more aggressiveness on that. Keep aware, and that where can you find tax resident, and then let me put it this way, it's not as easy as 183-day rule. There's domicile environment in the UK, Anglo-Saxon world, right, for many reasons. The US has also that. There's economic interest, there's property, where you make your money, and I mean, I've had people saying, right, what should I do? I have an MIP, Management Incentive Plan. I don't want, right, if this happens, if we do an exit, I'm a CFO in a company, I want to get out, and I'm like, well, I don't want to pay the taxes, right? And you're almost there, and like, go to Dubai. Well, if you're a board member in a Sweden entity, and it's coming from a Sweden entity, you're going to end up being Swiss tax resident, even if you live 300 days a year, because it's not that easy to exit your own country.
Add one other thing, going back to talking about the summer plans, right? Because there's obviously a bunch of ways that you can get. And like you're saying, there's no standard rule of residency in each one of these countries, right? They all have their own rules. And I think one of the other things that people forget about a lot too is, even if you forget about the residency aspect for a second, if you're, let's say, a self-employed consultant and you're earning money in one of these countries while you're there, it could potentially become source income there that would be liable for tax there. Or going to your example of being a director on a company. Like if you're a sole director on a company, you have central control and management, and now you're managing it from this company, you potentially create tax residency for that company in that country, or permanent establishment, or there's all kinds of bad situations. I mean, all that stuff needs to be looked at when you're spending significant amounts of time in any country.
No, and just one point, that sometimes, as I said, going back to that 90-day rules, the tax residency conflict rules generally don't apply, because people have that impression where it applies one country where you claim you're resident versus the rest of the world, right? And the case is that most of the countries look country by country. Even if you spend 100 days in the UAE and you spend 150 in Spain, putting that example, you could be attracted as Spanish tax resident. Just because you're going to say, no, I don't spend anywhere 183, so I'm just sticking to my tax residency in UAE. And maybe they'll say, well, it's a country by country analysis on who has the priority taxing.